Welcome back to the Real Estate Standard Podcast, episode 15, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman. I'm here with Chris and Kenny. Today is April 7th, 2026 already. Each episode here, we break down how serious operators, investors, and developers stay competitive in the 21st century by examining commercial real estate through the lens of Bitcoin. On today's episode, we're joined by Kenny of Westmain Self-Storage to discuss dynamic self-storage operations. And I'll also throw it over to Kenny so we can get the latest update on Westmain storage stacking.
Thanks, Tim. As of today, April 7th, our total Bitcoin holdings are just over 4 Bitcoin. We crossed the 4 Bitcoin milestone. We have 405 million Satoshis on our balance sheet. And so far in the year, we've stacked 186 million Satoshis, so 1.86 Bitcoin. That brings our Bitcoin yield to 85% and our Bitcoin per square foot at 5,838 sats. I did a post, on a little side note, I did a post on X the other day. There's approximately 97 billion square feet of commercial real estate. And so just a little perspective, if you divide the total cap of 21 million, all the Bitcoin that ever will be, well, just under, you get 21,649 Satoshis per square foot. So that's if, everything was divided by all the Bitcoin that would ever be. And that number will continue to shrink. And then if you just kind of do some quick napkin math and subtract the US Bitcoin ETFs, the public companies that are stacking Bitcoin, and Satoshi's Bitcoin, it would bring it down to 17,993 sats. And lastly, on the update for the dashboard, we just crossed over the 1 year of mortgage payment coverage. So we're finally over 1 year. We were struggling to break over 12 months for a while with the price going down each week, but we finally have 1 year of mortgage payments covered on the balance sheet as well. And we announced it a few weeks ago, but we received our second stretch payment from our digital credit. That's boosted our net operating income by 3% so far, assuming we don't add any more digital credit. What do you think, Chris?
I think the consistency here is really starting to come through and be the story in and of itself. The Satoshis per square foot continues to be my preferred metric here. And we've talked about it in the past. We'll do a show here in the coming weeks on Satoshis per square foot and some of the other Bitcoin related metrics. But you think about what the heck does Satoshis per square foot mean? And whether it's Westmain or any other asset that you're evaluating, as an investor, you can there's certain things you can glean from a property that has a rising Satoshis per square foot versus a flat or even declining Satoshis per square foot. And as we get further into this process here, I think the rising sats per square foot is going to become all that much more important. And for the folks out there kind of saying, what the heck does that mean, or how would you interpret it? If your property like Westmain has an increasing sats per square foot metric, right? One thing you can take away from there is that the property is generating excess economic energy, right? That is a positive thing. And that excess energy, that surplus, is being then preserved, right, in Bitcoin rather than being diluted away, right? If you're holding something just like US dollars or treasuries, right? So I think that's going to, really start to become front and center for real estate operators, forward-looking real estate operators, as this thing unfolds. So it's going to be very, very important that the asset or the portfolio is strengthening their balance sheet regardless of where we are in the broader market cycle. And this is one of those ways you demonstrate that as an operator, and it's also a way that you can evaluate future acquisition opportunities.
Yeah, I was doing a little bit of X post, and I'm trying to post more on X, and I did another post where I compared Westmain self-storage against the national REITs, the public storage and extra space storage, and just trying to get a glimpse of what they would have to do to match Westmain. I realize we're a single facility and they have, hundreds of millions of square feet, but for them to get to the 5,000 satoshis per square foot, you're talking substantial amounts of money, and prolonging or allocating dividend payments for, I think, between 4 and 10 months, depending on which REIT you're looking at. And they would have to buy, I think, public has to buy over 10,000 Bitcoin, and that's just today. And as we continue to allocate, it becomes harder and harder to match the same sats per square foot. So it's a very interesting metric, and that's assuming that this only real estate guys are going to be buying Bitcoin. It's open to the whole world, so you have all types of businesses, you have individuals, and it becomes a much smaller number. And to yeah, just to kind of think of that, you'll be in like sub Satoshi land, before not too long, once there's, mass adoption. So just kind of
It
an
definitely
interesting
puts it in
metric to keep an
perspective,
eye on.
right? Yeah, it puts it in
Yeah.
perspective. I mean, to that point, I mean, public storage, I forgive me, I don't know all the, their metrics off the top of my head, but they're the, one of the top three, players in the self-storage space. And you think about how many billions of dollars they would have to allocate just to acquire 10,000 Bitcoin, right? And, if you kind of compare that to, a company like Strive that, has a running start, right? They have the infrastructure, they have the talent, the know-how all in place already. And Tim, do you know what Strive has off the top of your head? I think it's 13,000 and change Bitcoin. So,
Yep.
when you put it in that context, Kenny, that's when you really start to have a, holy cow moment, right? Because you don't just have public storage, you got the Cube guys. There's a few others, but then you start going down this list of REITs, these massive operators in all these different property types: office, hospitality, multifamily, industrial, etc. You get to some very, very, very massive numbers very quickly, and they all have similar returns. They all have similar economies of scale as far as operational margins. They're skinny businesses, so those guys are trying to squeeze out every little bit of margin that they can.
Yeah, it's definitely something to keep an eye on. I don't know if you saw, Tim, I requested to share just to show that tweet there, or that message, just to give anyone that's watching some context about what we're talking about here. Let's see if I can zoom in for you.
There you go.
So yeah, so our total square footage, like, you can't make this stuff up. Our gross square footage is 69,420 square feet. And this hasn't been updated. It will get updated probably by the end of the day, once I'm pulling the numbers with bitcointreasury.net. So this is probably not live, but the screenshot is from last week, and you can see where public storage needs 12,459 Bitcoin to match. Now that's only about 4.8 months of dividend payments for them. So if they like were to have consensus amongst all their shareholders and they did a shareholder vote that, hey, we're going to suspend dividend payments and allocate to Bitcoin, it would take them a little under 5 months to acquire the Bitcoin needed to match. And that's assuming Bitcoin stays at today's prices. And Extra Space is in a tougher situation here. They actually need 17,000 Bitcoin to match, and it's going to cost them over $1 billion, 1.2 billion, and that's 10.2 months of dividend payments. So
You should just pause there real quick, Kenny, and think about, the 4.8 months and the 10 months between the two, respectively. And, now you get into, the game theory, right? If Public Storage announces, that they've garnered some level of consensus among, majority shareholders to go out and do this, right? We're assuming that Bitcoin is still at, call it 70,000. We're assuming they're the only players in the market doing it, and that announcement is not going to make a company like Extra Space sit up, take note, and move as fast as they can to do the same thing. So, and again, to your point, this is just one one little group of players in the commercial real estate world. We know what Strategy's doing, we know what Strive's doing, and all the others. So those numbers get out of whack very quickly once the fuse is lit. And I don't know, we need to find somebody that's an expert in the REIT space. That's a little bit out of my jurisdiction, to tell you the truth, but we got to get a REIT expert on here to kind of walk us through and kind of talk through some of the internal mechanics and just how some of these guys think and make decisions, because it's it's a world all of its own. It's very different from how an ownership group like Westmain would go about it. It's very different from a lot of the smaller private funds. So they're they're in a little niche of their own. So if we got any listeners out there with some connections to the REIT space, DM us. We'd love an introduction, or just have a conversation on maybe who we should reach out to get some extra insights here.
yeah, I mean, from what I see as an operator, kind of looking at these guys as competitors, when we don't really have many REITs where we're located. We're in a pretty tight area where it's kind of hard to break into. Um, but these guys move slow. It takes time. That they're the 800-pound gorilla when it comes to self storage, and they move very slow. And Extra Space was actually surprised me that they added solar to a lot of their facilities, which was you know a no-brainer for us, because when you eliminate one of your larger operating expenses, that has a significant um, impact on how the property's valued, right? Because you're now operating at a higher efficiency, and you're every with a 5% cap rate, every dollar that you save, that's a 20x in value. So you're incentivized to keep your expenses low, and your revenue as high as you can. And you know part of the thing that we're able to do is move quick. We can implement these new technologies quickly, and we're doing that now with AI. We're building custom property management tools, and you get to start to kind of think over, like, you get to think about it way different. Before, you're going and looking to see what's on the market. You have Yardi property management, you have Sirasoft, you have some other third party vendors in the marketplace, and you kind of compare what they have versus the others. But with AI, you get to kind of just think about what you actually need and build what you need. You don't need the 90 other features that you're never going to use, and you get to add all the features that you've requested and they were too busy to add. And now you also have like more of a moat, right? Because I remember we switched over to a a company for our website at one point, and we noticed that one of our competitors went right to the same company to get their website done, right? And if you build your own tools, if you build your own website, your own stuff, and you own it, there's no one else like that can copy that, right? You can't just uh, go to the vendor and say, "Hey, we want what they have," because then they have to go make it from scratch. They don't even know what you have.
Mhm.
Um, So I think there's a lot of people looking for like a one size fits all solution. Like they're waiting for AI for real estate, AI for self storage. And they're like, yeah, once that comes out, I'll adopt. But they're missing the forest for the trees because it's all customizable, it's all internal. And if you don't build your own tools, you're just going to start falling way behind.
That's yeah, I think you're exactly right. And I think you're hitting on a very, very big topic. I can tell you this from personal experience, not just with my own firm, but just being in the industry, right? Regardless of what you are doing in commercial real estate, every single firm, every single professional they're aware of AI, obviously. Some of them are more willing to adopt it and try it out than others, right? I mean, that's kind of normal, I suppose. But the default response for a lot of these guys is, I'll wait and see which ones, win out, right? Because right now, I mean, I get hit up personally. I get hit up maybe a dozen times a week by some random new AI solution, right? They're trying to sell me something, whether it's a CRM or some kind of database. It's some kind of digital space platform. I mean, there's all kinds of different kind of plays on it, and it's overwhelming, especially for somebody that's not living and breathing this. It's not their core skill set. So the default behavior at that point is, what, let me just put this on the back burner. I'm going to let the first movers figure it out for us or for me, right? And then I'll eventually integrate some of these systems into my business down the road, right? So they focus on their business, they put their head back down, and they're doing it the quote unquote old way, right? The way they always have. And what they're missing is that by the time they integrate these tools and these systems, the groups that were first movers, they are going to have such a head start that it's going to be impossible to catch up, right? And I think that's what you're getting to hear, Kenny, is the not only the first movers, but the true, the competition in the space is going up exponentially, right? And once a Westmain self storage implements their customizable tech stack, right, that is completely proprietary and nobody else knows what's going on or how to or has access to it, you're going to see operators separate themselves just on that, right? And I think this kind of brings it back to one of our overarching themes with this pod, is that if you're going to be a competitive and profitable real estate investor and operator, into the future, right? You need to think about things differently. You need to try new things. You need to be a Swiss Army knife, right? Whether it is how you store your capital and allocate your capital. How is it that you're doing your property management? What does your internal tech stack look like, right? I mean, you can go down the list of what it takes to be in commercial real estate, and all these little subsectors are going to be reinvented. They're going to be disrupted, and the those that do it the best for their situations, they are going to rise to the top, regardless of size, regardless of assets under management, regardless of scale. You're going to see some small players run circles around the big dogs.
So to your point, I wanted to comment on a few things there. I think when we started adding Bitcoin to our balance sheet, it lets you start thinking bigger, down the road. You get excited. And the AI is another component that like allows the David's versus Goliath scenario, like the odds get tilted in the favor of David, right? And one of the moats that these larger operators had was they were able to afford developers and software engineers to go build out these custom tools, right, for themselves. Now any operator can do that as long as they have an AI guy, right? You need an AI guy, just like you needed an IT guy. Now you need somebody that can implement AI into your business. And to your point, like in the self-storage space, there were venture capitalists that funded some futuristic kind of self-storage operations. One of them is called Clutter, and they're like on-demand storage. It's like full service self-storage. They show up to your house in a truck with some guys. They box everything up, and then they drive it and store it in their storage facility. And they have an app where you can kind of track your boxes. And if you need access to one of them, they charge a fee, but you can have one of those boxes delivered or your couch delivered and keep the rest in storage. And you have like the flexible sizing and it's kind of like a less intensive solution. Now, for those companies, they don't necessarily have the best location, right? Because they're more like, we're going to drive to you. But something I see coming to the self-storage industry is every single operator is going to be capable of doing some kind of on-demand full service self-storage. You got self-driving coming, you got like robotics, you have these humanoid robots, and you're going to be able to send a vehicle to somebody's house with a robot to help them load it into the truck. You can send as many vehicles as you need. You could have them just kind of keep lining up outside, taking boxes away from you, and they can drive them right to the facility. And I'm just being informed that we might have some technical difficulties. I can still hear you on my side, Tim.
Yeah, I can hear you loud and clear.
Okay, we may have lost Chris. We'll see if he can reconnect. But yeah, just to continue, I think that every single operator is going to have the tools that these big guys had, Tim. They're gonna have. They don't need the team of software engineers and marketing departments and graphic designers and having this whole digital agency to push it along with call centers, right? Like this can all be automated with AI and robotics. So
Mhm.
I think it's going to be a whole new world. And I think like Westmain specifically, when we think about the future of self storage, we've been thinking in decades for a while, and that's one of the reasons we were quick to deploy solar. Right, solar panels have a 25-year lifespan. Um, they're going to save you significant expenses when it comes to your operations. And now we're in a position where if we add a self-driving vehicle fleet, we can easily charge those things up. We're not going to have to come out of pocket to power those vehicles. We can easily deploy EV charging stations. And we can offer this full service on demand storage that only like the top companies could afford, right? Like you would have to spend millions on building out platform and software and having the capability to manage all those units within an app and give that kind of to all their users and to so I know we just lost you, Chris, but I'm sure you kind of get the gist of what we've been discussing here. And I think this is right around the corner. Like we're talking like the next few years, we're gonna see these smaller operators, and it's not just self-storage, it's gonna be throughout real estate and all other industries as well. But you're gonna see these smaller operators start doing stuff, start being able to pay more for buildings or acquisitions than their competitors, and it's gonna be because their cash flow is worth more to them. They're deploying it into Bitcoin. They're turbocharging their cash flow with digital credit. They're energizing their facility and their robots with solar energy. They're just winning on multiple fronts, and they become unstoppable. And then they can, start scaling. Right? You don't need the same like all like the heavy tools like these departments with hundreds of people in them anymore to compete. So it's just small teams, like 2-3 people on a team, and you got a few AI agents, and you can just cover more ground. So it's if you have these big teams, well, you got to get your people using the AI, and they all have to be productive with it. If they're not productive, you're going to have to chop them and find people that are, because they're just going to cause drag. And so that's a huge challenge. If you've got all these employees, now you're like, well, maybe we'll just train them all to use AI. And then you have a lot of people that I see it all the time where there's like people heavily against AI for some reason or another, right? They just don't whether they don't want to go through the learning curve or they or I can't figure it out. But it's like maybe it's like you can't teach an old dog new tricks kind of thing, and it's like becoming really tough to stay on top. And you see people shouting into the void.
I think it's only a matter. I mean, I think if you're on Twitter, I mean, I feel like my feed has given me a lot of these posts recently, just listing out the layoffs and the hirings at some of these big tech firms, right? Whether it's, just total headcount or percentage of overall workforce, right? It's only a matter of time before you start seeing the commercial real estate shops, right? The REITs that we're talking about here, doing the same thing. I mean, that is just that's where the puck is going. You can scream into the void all you want. That is completely unproductive. So those that, recognize, take a slice of humble pie, quite honestly, they recognize what's going on here and they lean into it, right? They're going to have a competitive advantage. Going back to one of the first things you said there, Kenny, before I dropped off, there are two that I know of. There are two major brokerage firms. They're both publicly traded. I won't say their name. You can easily look them up. But both of them have internal policies that none of their team, none of their brokers or anything of that sort are allowed to use LLMs, Gemini, ChatGPT, X, so on and so forth. To me, I mean, if I was someone that played the stock market, I'd be shorting the hell out of those stocks right about now, because they're going to get outcompeted in a big way by the large players that don't have that policy, but more importantly, the boutique and medium regional shops that do leverage all of those tools. So I mean, we hammer on the Bitcoin disruption and now the digital credit disruption that's going to take the industry by storm. But what you're hitting on here today, Kenny, is the third major disruption, the third secular trend that is hitting the industry simultaneously, and that's AI. right? How the heck are you using it? How are you integrating it into operations and acquisitions and, portfolio optimization, so on and so forth. So, that all said, I don't think there's a, one size fits all solution here. It's going to be very bespoke and, case by case. And the last thing I want to say, kind of go back to, the topic of Satoshis per square foot with some of these larger REITs, right? Maybe I would not be surprised if you see when this topic continues to pick up steam and becomes a little bit more commonplace, as far as conversations concerned, you're going to see some operators say, you know what, we're going to, sidestep Bitcoin. We're going to allocate, that $1 billion, that 6 months worth of dividends to STRC, right? You're going to see operators make that decision, right? And especially, I mean, this goes back to getting a REIT specialist on the pod, but the REITs have very specific rules that they have to follow. They have to distribute, I think it's 90 or 92% of their free cash flow to investors. I mean, you buy a REIT as a income stream, right? You're not buying a REIT for, big upside, massive appreciation. So you think about how those guys are allocating capital and making decisions. If I'm a treasurer or a CFO and I can say, hey, I'm going to, go put X amount into STRC, and, my stock is paying a 5.5% dividend, right? I mean, that's meaningful, value accretion for the shareholders. So maybe that's the right play for them, rather than chasing, the strives of the world with, 10,000 plus Bitcoin. So it'll be interesting to see how that unfolds, in addition to the AI strategies.
So I'm not a REIT expert either, but I do have opinions.
Let's hear it,
man. I think the REIT structure is going to be retired because the ROC dividend, which was popular in real estate, oil and gas, the return of capital structure is better. When you look at the tax implications, right? The main reason you go into a REIT structure is to get, favorable taxes. But
Yep.
return of capital is the best treatment you can get. It's rock beats scissors, scissors beats paper, like rock beats REITs. And so I think, that's kind of like the dinosaur. And I think we're going to go through a period of like where lots of companies are blockbustered because they're not paying attention. Right, they're just asleep at the wheel. They've been coasting along. The management is a older age boomers. Let's be honest here, and they've been coasting along, and they think that they're in the driver's seat. But then you got the Terminator pulling up right behind you. So I mean, we're just gonna live through the greatest transformation in human history. The AI and Bitcoin, polar opposites, right? Total polar opposites. AI is like, look at when it comes to like the data centers, right? Like they're spending crazy money feeding energy to their LLMs. They're the highest buyer of energy right now. Bitcoin, it uses stranded energy. It pays the least amount for energy. So it's no surprise to me that we're seeing Bitcoin miners flock to AI because they're making orders of magnitude more money allocating their resources to service their infrastructure. Once these companies stop subsidizing it, right? Because they're like out competing each other for the energy. These miners have the power purchase agreements, and they got the power tied up for the next 5-10 years. And so they're just like outbidding them. So you got like the two energy hogs in the room competing for energy, and one's overpaying significantly, and the other one's Bitcoin paying like the least it can. So interesting times.
Kenny's bringing the heat today, Tim, with the analogies and metaphors.
I'm trying
I love it.
here.
Don't be a blockbuster.
Yeah. I mean, I don't disagree. I've thought about the REIT situation quite a bit, and I don't know that it goes from what it is today, straight to retirement. I think there's probably a transition period where I think you're going to get to a point in the market where the market participants are going to demand, the industry is going to be, they're going to be forced to change the rules, right? There's going to be some kind of overhaul in the regulations and the rules they have to adhere to, right? And that's going to be step one in that transition. And you will see, I don't know how many REITs there are, across the US or even across the globe, but let's just say for conversation purposes, you're going to have a certain percentage of those REITs make that first step of the transition well, right? And what is that? Is it 20% of them? Is it 50% of them? I don't know, right? But those that make that first step of that first phase of the transition successfully, they're going to remain. They will acquire the assets of the losers at significant discounts, and they will become, that much bigger. They'll have that much more scale. REITs, REITs, I feel like I forget his name, but I think his name's David Auerbach. He's got a pretty active Twitter page. You should check him out. But he's in the REIT space, and he always says that REITs touch our lives every single day, right? Whether it's the distribution facility that your Amazon packages are coming from, or it's the massive destination retail center where, that it's serving an entire region, those types of examples, the data center example that you're talking about. So the properties that REITs own and operate, they're massive. They are often specialized uses. Chris and Kenny and Tim are not, owning those properties on their own, right? So again, I don't think they're going to zero by any stretch of the imagination, but the way that they are operated, the way that they distribute returns, that's all changing, right? I think the question, where we could probably, arm wrestle pretty good is what that timeline looks like and, how disruptive is it? Oh, now do we lose Kenny?
No, I think I'm good. I was just kind of thinking about what you're saying here, and I mean, to me, like, they get classified as a REIT, and don't quote me on this. They get classified as a REIT for meeting certain requirements or operating in a certain way, and it's just for favorable taxes. Like, that's the main advantage. So it's kind of like a badge, right? Like, it's like
Yeah.
these guys are REITs. And so I think you're gonna have to see these guys take the badge off, and you're gonna see them go back to offering rock dividends, and that's something that real estate guys pioneered. So the fact that Strategy's, dividend from Stretch is considered a rock dividend, it just more intertwined with real estate. Like, real estate has been collateral for thousands of years, and Bitcoin's the new form of collateral, and it's going to be intertwined, and it's going to have some of the same qualifications. I mean, it's technically classified as a property, right? And just speaking about Stretch, I don't know if you saw, but yesterday they announced that they had acquired a little under, I think, 5,000 Bitcoin. But the interesting thing there was that the Stretch ATM at the market financed most of the Bitcoin. Normally, we see their common stock strategy, MSTR, financing most of the Bitcoin purchases. But we're kind of seeing this. I know I'm kind of all over the place today, but I just wanted to throw that out there. I didn't know if you saw that, Chris. I know you've been busy.
I did not. I've been on a little vacation here, so that's why I got the the vino with me today, riding shotgun, giving me the creative juices to keep up with Kenny's analogies. But yeah, I mean, I think about, what we're going to get into this in future episodes too, but it's like, regardless of combining the two, right? If I'm an investor, right, let's say I got $500,000 I'm going to go, put into one or two deals, right? Whether it's a REIT or otherwise. And, now all of a sudden I got all these different real estate options, the risks that come along with it, the return profiles that come along with it, or I can go put that $500,000 into STRK, right? Get my 8% dividend every quarter. I got the upside appreciation. I got I got the liquidity, right? I don't have the tenants. I don't have the capital lockup, right? Like, you start to get into a world where if you are not extremely efficient and effective with your capital allocation, right, you ain't going to be around long, because you ain't going to have any capital. You aren't going to be operating these properties, and the ones that do, they're going to come in, buy it up for pennies on the dollar. That's what we're getting to. So,
Yeah, it's fun kind of thinking out in the future, because it's happening so fast. It's we're living through it. I think just in a year from now, we're going to start seeing some of these things that we're talking about take flight.
and that's what I think a lot of people in real estate are sleeping on, is the pace of this change, right? Every other major technological adoption, going back, I mean, you can go back as long as you want, but it didn't happen in, call it 5 years. Give them the benefit out. It didn't happen in 10 years or less. Right. So I think this is where, exponential growth, exponential change comes into play. And, humans, most people they don't realize that our brains are so terrible at thinking in exponentials. Right. So you add into the fray, something like Bitcoin or something like AI, and, just the exponential pace by, that alone is going to have significant implications.
Anything else you want to cover today, Kenny? Anything AI or robotics wise otherwise that you want to cover, or maybe go to closing thoughts?
Yeah, we can do closing thoughts. One thing I'll say is I heard that some cyber cabs have been spotted in San Francisco with no steering wheel. So they're coming off the assembly line, and it looks like they're mapping out cities with some of their cameras and whatnot on their vehicles. I know that they don't have LiDAR on all of them, but I think maybe some of these special cabs are going through the cities and mapping them out. And so, yeah, the self-driving, the robotics, the humanoid robots, they're going to just start showing up. Here in LA, we see some robots on the sidewalk delivering like food and beverages. Those are kind of common, and the Waymos are all over the city. So I think, maybe if you're kind of in a more rural area, like, it's harder to see it coming, but it's here.
Yeah, I remember seeing some of those gadgets running up and down the sidewalk when I was in Miami back in January, just delivering food and stopping so they don't hit people. So, I mean, looked kind of, I mean, the first time you see anything, it's like, wow. And I remember being in, I guess it was a Waymo last year, 1 or 2 years ago, in the San Francisco area, actually, when I was visiting Grain of Salt. And one of our friends was like, "Hey, are you heading back to your hotel? Let me get you a ride in a driverless car." And I was like, "This is just, it blows your mind the first time that you experience it, unless you're, I don't know how it couldn't blow your mind." But yeah, awesome. Chris, any final thoughts for the day?
Yeah, I always try to be, end these things on a positive or optimistic note. And, I think Kenny hit it on the head. This is a David and Goliath story here. And for the first time, David has a significant advantage, right? So if you are in that David category, if you're a small, medium size operator, if you're an entrepreneur, a solopreneur, just like we sit here and we, urge you to explore and get educated on Bitcoin, I'm going to urge you and implore you to do the same with this AI, right? Because it's not your enemy, right? It is a new tool that enhances and complements the real estate, and the first movers are going to benefit so disproportionately. You're going to have a competitive advantage. You're going to create a moat. You're going to outcompete most of the players in the market. So wherever you sit in the industry, whatever role you play, I would encourage and challenge you to lean into this. I know we're all busy. I know there's a lot going on, but I don't think that's an excuse. Start small. Start, 15 minutes a day. If you're really that busy, watch some YouTube videos, watch some Twitter personalities. Find some way to incorporate it into your daily schedules and go from there. I think you will be pleasantly surprised at the return on your time, your return on investment that will garner, and you'll be even more excited to see how it can transform your business. So that's my 2 cents for today.
Awesome. Well, that's it for today's episode 15. If this conversation was useful, please share it with a partner, a client, or somebody that's making decisions in the marketplace. New episodes of the Real Estate Standard drop weekly. So subscribe, like, do all those things that you can do so you can keep track and get notified. Until next time, stay disciplined, think long term, and stack sats. This is the Real Estate Standard.